The Tokyo Stock Exchange reorganized its market structure in April, the biggest reform in 60 years. The market has been reorganized into 3 segments: prime market, standard, and growth from 4, the first section, second section, JASDAQ, and Mothers. How will the reform help the development of Japan's capital market?
Previous market segments were carried over from the cash equity market of Tokyo Stock Exchange and Osaka Securities Exchange when they merged back in 2013. From the investor's perspective, the characteristics of each division were unclear, and the market segments were not functioning well as an incentive for listed companies to achieve their growth potential. Therefore, we restructured the markets into 3 segments that have clear differences from the investor's perspective, while encouraging listed companies to strive for corporate value improvement. Prime market, welcoming investment from overseas investors, have an adequate size, liquidity, and strong governance. Standard market, companies with adequate size and liquidity and also governance for a listed company. Growth market is startup companies with high growth potential. And also we have standardized the listing criteria and the delisting criteria. The criteria for listing and delisting used to be so different. In other words, once you list your shares, you don't need to worry about you may be forced to be delisted. Now it is standardized, so companies have to work seriously towards sustainable growth. The ultimate goal of the market restructuring is to let Japanese companies to work more and more proactively towards sustainable growth and mid to long-term corporate value improvement, and to create an attractive and investable market from the viewpoint of both domestic and overseas investors.
There are 1,839 companies qualifying for the prime market, only 16% smaller than first section. So how do you respond to the criticism that the change is not enough? You also said this is only the first step. What further steps will be implemented in the future?
The important part is how each individual company can use their selection of a new market segment as an opportunity for change. For example, among those 1,839 companies that chose the prime market, even those which meet the criteria from the beginning, it's 1,544 companies met the standard from the beginning, have to start working on, for example, governance with overseas investors in mind, and also English disclosure. And while those which do not meet the criteria, it was 295 companies, have to consider new growth strategies and ways to improve their liquidity. I encourage everyone to focus not just on the number of companies, but also the changes inside each company. We are not planning any specific revision of the listing standard at this moment. However, in order to get this transformation meaningful and build attractive markets, we need to appropriately understand trends among listed companies and the needs of market users and continue to address those needs. From this perspective, we decided to establish a council of experts that will continuously follow up on progress of listed companies' efforts and investors' evaluation and advise TSE on additional measures. With advice from the council, we would like to consider additional measures, including handling of the grandfather rules.
Japan Exchange Group announced Target 2030 on March, the long-term vision. So what kind of exchange do you envision Tokyo Stock Exchange will be in 2030? What challenges do you see in achieving this goal?
One of the most important missions we have as a market operator is to provide solutions for a wide range of social issues centered on the ability to raise and circulate capital, as noted under the Target 2030. And we provide these solutions according to social needs. In order to provide greater convenience, JPX will evolve into a global comprehensive finance and information platform. In addition, we are faced with an urgent task to address the shifting global environment. Keeping that in mind, we have announced a target to achieve carbon neutrality across the whole JPX group by fiscal year 2024. Also, we have set up the somewhat challenging goal to achieve carbon neutrality in securities market as a whole, that is our value chain, by 2030. To achieve this goal, it is imperative to have support from the securities market as a whole, including market participants.
What requirements do you have on market participants to achieve these goals?
First of all, for the listed companies, we have set out the corporate governance code for prime listed companies for higher standard. Say, for example, those prime listed companies have to disclose those environment-based, what kind of basic policy they have for the environment policy. And also they have to disclose based upon the TCFD recommendations or globally recognized ISSB's standard in their disclosures.
Tokyo Stock Exchange has been promoting IPO business in Asia, targeting cross-border companies. What progress has been made in attracting foreign companies to go public in Japan?
Japan is the third largest economy in the world with household financial assets of around 2,000 trillion yen and also has highly efficient markets. We'd like to take advantage of these characteristics by actively working to promote the attractiveness of a TSE to overseas investors and companies, particularly in Asia, and bringing them to our market. The IPO market in Tokyo has been strong the last few years, and it is also highly rated by especially Asian startups. Last year, we had 5 listings of what we call cross-border companies. Cross-border companies are 3 types. Those companies based abroad, and also those companies used to be based abroad, but then re-established as a Japanese company, and companies with foreign-born CEOs. We have been doing IPO promotions, mainly in China, aimed at these kind of high-growth cross-border companies which have links to Japan. And I think we are now seeing the good result of this. Actually, because of these 5 listings, TSE has been getting more inquiries and requests for advice. Therefore, we have improved our information provisions on the JPX website, including about the cross-border companies listing. For high-growth cross-border companies with links to Japan, we believe that the listing on TSE is an optimal way of improving their corporate value. We are always welcome and open to companies from all over the world, including China.
How can listing in Japan benefit foreign companies?
Because Japanese companies and the Japanese Tokyo Stock Exchange's liquidity is quite high, in other words, and also the valuation is high compared with other Asian companies. And also, I think you can raise ample amount of capital here at the time of IPO. So you can get high valuation and also good liquidity of the shares after listing.
Japan Exchange Group has established JapanChina ETF Connectivity with Shanghai and Shenzhen Stock Exchange. We will see other progress in cooperation with China in the future.
Sure. For JapanChina ETF Connectivity, for ETFs tracking the topics at the Nikkei 225, Japan's leading indices are listed in Shanghai, and one ETF 225 Nikkei 225 ETF is listed in Shenzhen. At the same time, there are 6 China-related ETFs listed on TSE. These are, they are providing Chinese as well as the Japanese investors with new investment opportunities in the Japanese and the Chinese market. On the other hand, we recognize that there is growing demand from Chinese as well as the Japanese investors who wish to diversify their investment into global markets, including Japanese as well as the Chinese market. In order to respond to this demand, JPX is communicating with the relevant authorities in Japan and China, as well as exchanges in China, to aim for cross listings of other products as well as ETFs. Until now, we have achieved cross listings of ETFs between China and Japan in cooperation with the related parties. But considering the scale of the capital markets in China and Japan, I am positive that there is a huge growth potential. The Japan-China ETF Connectivity scheme was a plan to start small and grow large. So in addition to the current initiatives I mentioned, we want to grow the scheme large, partly by promoting the markets to investors. In cooperation with the Chinese and the Japanese authorities, as well as the market participants, we will continue to work on the further developments of capital market in both countries and the enhancement of convenience for Chinese and Japanese investors. So I'd like you to keep watching our initiatives closely in the future.
So how's your communication with Chinese authorities going? Is there any particular cooperation under discussion?
At this moment, we don't have a concrete, date or products in mind yet. But we have, we raised, kind of points that, kind of futures contract as well. Both in Japan and China, we have a very active futures contract market as well. So, that's other kind of next area we'd like to collaborate.
What do you think is the easiest part to achieve to deepen the connectivity between China and Japan's capital market?
Well, probably the easier part would be, we will expand the number of ETFs, because it's already there. As I told you, 5 ETFs in China, Japanese ETFs in China, Chinese market, and 6 Chinese ETFs in Japanese market. So it is already, we have a track record already. So that's an expansion of a number of ETFs might be the easier way. But I think I'd like to expand into other product types like futures contract or options maybe. It would be broader, deeper market developments we will see. But it's more difficult, I think.